G'day everybody, this is Johnny Seville from Acorn Wealth Corp. This is your executive summary for stock setups for Wednesday. Now, the of course open range is coming to an end. The third Friday of the month, of course, sets a key range for market makers to determine which direction the market will close by the end of the month. So the range, as you can see, was set on the third Friday, as you can see here, on Friday, January 19th. We closed 3 points above that range, or more than 3 points above that range, on the January 22nd. So that gave us a bullish bias that tells us we are going to close within this range or above it come the end of the month. Now, with the downturn that happened today, as you can see, that brings us right back towards this open range support, which is also where the 20-day moving average will be. So I would not be surprised at all to see a pullback towards this kind of this low here that we saw on January 19th, which is around 27.80 basically. Wouldn't be surprised to see a pullback to that level. Or it could bounce here where we're at, but I wouldn't be surprised to see it pull back a little bit further. That would be a successful open range, and then we get a new open range which resets on the first trading day of February, which is Thursday. So what we're going to really be looking for here is what happens tomorrow and Thursday, and whether we close higher or lower than that range that we set. Now, this, as you know, for those of you who've been following us for a while, this has been back tested over the last 8 years, and year to year it gives us 48 signals and ranges from usually 80 to 90% accuracy over 48 signals a year over 8 years of back testing. So that is a pretty excellent track record. So my feeling is, given the very shaky nature of the S&P, I wouldn't be taking any new positions until we get past the next 2 days. That's going to say a lot. If you have a look at the Russell 2000, which is IWM is the ETF, again, we've been watching this inverse ETF. Inverse head and shoulders for a while. You can see the upside down chart indicates that a little bit clearer. But we've been waiting for the Russell to close above 160 as an indication for a 7% rally in the markets. We have not been able to do that. The other thing that we've been watching, high yield bonds. Now these go up. Let me just clear this up a little bit. These go up if the market likes risk, and in almost every single crash, these have gone down before the market dropped. Now again, remember what happened in the market, the S&P. The S&P 500, this is the first day it's broken down a new low. First day. It's basically since November. So this is the first day the market's gone down. High yield bonds has been diverging for several days. In fact, it's been making new lows since January 25th. So 1, 2, 3, fourth day, high yield bonds have been going down. And this could drop all the way down to as much as 85.40, which usually indicates a 5 to 10% drop in the overall markets. So that's definitely something that is leading, a leading indicator in terms of market movement. High yield bonds are breaking down. Stocks above or below their moving average are also breaking down. If you look over the history, this is a percentage of how many stocks are above or below their 50-day moving average. And if we go back over the last 10 years, you can see that 9 times we have hit this 80% mark, and 9 out of those 9 times we have gone straight down to the 43% or lower. So a big decline in the amount of stocks above their support. Only once, twice, 3, 4, 5 times, 6 times. 6 times where we haven't stopped at 80% and we kept going up. And in 100% of those occasions, the market peaked within 4 weeks. So basically, if we look at all these smart money indicators, they are saying that we are either at or close to a top. But again, I wouldn't be starting to react until we see the open range confirm. But the early warning signs are there now. And of course, we are at 61.18, almost a Fibonacci number there. Of the stocks above or below the average. So we've gone from 76% of stocks above at their 50-day average on the close of 2 weeks ago to 61% today. So we've dropped 15% of stocks have broken bearishly below their 50-day moving average. So there you go. Those are a couple of things. So once again, I would be very cautious. And the one final thing that I'll show you, Dow Jones Transports have also broken down. These were in this was in an upward channel. Now, an upward channel is bearish. Upward channels should break down. When they don't break down, they're normally forming an even more bearish pattern. In this case, if we flip it upside down, Dow Jones Transports, you can see, are actually making what's called a fallen angel, which is where you get a channel that breaks in the direction it shouldn't and forms a momentum bottom and then has a really good momentum move retracement. So again, I'll flip it the right side up in a second, but you can see here, so we've had this channel, we've broken from it, formed this beautiful little bottom, a ski jump, and you can see the divergence here in the smart money. This indicator indicates how much smart monies are buying or selling. So as you can see, as the price moved, smart money went the opposite direction. So again, if we turn it the right side way up, as prices went higher and higher and higher in Dow Jones Transports, there was less and less interest at higher prices. That's also a key warning signal. So this is what we're seeing across the board, and I think this is going to be setting up one way or another for an absolutely fantastic February. So looking forward to some excellent new alerts coming for the beginning of February. Now, if you're not receiving these types of videos every day and would like to, you can of course trial this service for only $9 for an entire month. We have an incredible month coming up where we'll be searching for the stocks that have been selected by looking for the highest amount of insider buying or the highest amount of insider selling so that we can find the juiciest setups ready to rock. And you won't want to miss out. For $9, you'll be getting access to those live training sessions every Tuesday and Thursday afternoon where we go over the scans and how we found them and so forth. All of that's included text messages throughout the day, all of that for $9. And of course, there's no commitment. You can try it for a month and see how much money you make. And of course, that's the excitement for the market for today. You can sign up for that at acornwealthcorp.com/gold. Otherwise, we will see you all tomorrow. Have a wonderful night. Take care.